Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit your business or real estate. I'm your host, Brett Swarts, and each episode I'm joined by some of the best wealth, financial, real estate, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He is known as the mad scientist of multifamily. And besides being one of the most in-demand speakers in commercial real estate, he is a data-driven guru, a process freak, and an outsourcing expert. He treats his $345 million multifamily portfolio as an ongoing experiment in efficiency and optimization. The mad scientist lives by two mantras. His first mantra is that we can only manage what we can measure. And number two is that data beats gut feel by a million miles. These mantras and a dozen other disruptive beliefs drive his profits for himself and his 400 plus investors. Please welcome to the show with me, Neal Bawa. Neal, how are you doing today?
Fantastic, Brett. Thanks for having me on the show. Very excited to be here.
Absolutely. Well, let's dive right in. For our listeners getting to know you for the first time, would you give us a little bit more about your background and your current focus?
Sure. I'm a geek, a nerd, a dork. I'm from Silicon Valley, technologist, data scientist, had a successful tech career, had a successful tech exit, dabbled in real estate since 2003. So I've been doing it now for 17 years. And the story is similar to that of many other technologists in that we work 70, 80 hours a week, we burn out, and we're all looking for financial freedom. And for me, the path to financial freedom and the path to a very low tax level both came through real estate.
Beautiful. And so I'm originally from the Bay Area, Silicon Valley as well. What's the number one, secret for those who are transitioning from the tech world into real estate, and was the hardest for you to learn?
I think the secret is really not much of a secret at all. I think for some reason, a significant portion of the tech industry believes that technology jobs are going to help them retire. And it is not true. It's not true for the guy that makes 100,000. It's not true for the gal that makes 200. It's not true for the guy that makes 300. Because as your income goes up, you're in California's highly progressive, very progressive tax system. And as time goes on, more and more of your money is actually getting funneled into the state of California and also into the federal coffers. I am yet to see any technologists, regardless of how much money they make, really plan effectively for retirement through the use of technology. I think it's always other venues, with real estate just being one of those venues. So the secret really is technology is a phenomenal way to plan your retirement and to build a foundation for your retirement. But by itself, it's terrible.
Excellent. And we're going to dive in that here in a minute, and that's going to kind of be the premise of our show, learning how to become a mad scientist of multifamily investing. But before we go there, Neal, I would actually take one other step back, and I want you to go back to perhaps your university days or even your high school days. And I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing to others. Some people call them superpowers. Some people call them strengths. I believe they're God-given gifts, and they're given to us to be a blessing. So I'm curious, what's the one or two gifts that you believe you were given? And how does that help how you help and bless people today?
My gift was very specific, Brad. I'm glad you asked that. So, unlike most people that have certain areas that they're good at, I was extremely good at one area. So when I was 9 or 10, they diagnosed me as borderline autistic. I was very quiet. I'm very kind of effusive, outgoing personality now, but I was very quiet. And so they diagnosed me with borderline autism, and I went to my dad used to be in the Air Force. There was an Air Force hospital, and there was a psychiatrist. They spent time with me, and they fixed me. So that issue went away. But as they were doing it, they discovered that I had a talent for numbers. So I would see patterns in numbers, and I would talk to the psychiatrist. And initially, they were taken aback by it, and then they realized that it was actually a gift. And so they helped me develop that gift. They initially I was afraid of it and I wouldn't discuss it with anybody, but then they said, no, this is a real gift, Neal. You can actually look at a bunch of numbers and tell the patterns amongst them. You have to develop this. So I'm really glad that that autism thing happened, because if it hadn't, that gift would never have developed. So till today, I can look at a spreadsheet and see patterns. It's almost like Neo reading the Matrix, and that's the best way to describe it. You see the numbers, the green numbers falling, and Neo's actually reading the Matrix, and he can see what's happening. The same sort of thing happens with me. I can tell patterns. So I look at a large amount of data, and I can tell patterns. And as I look at more and more data in the same area, the patterns become more and more discrete. And that's really been my gift to the real estate industry. I am not a real estate guy, even though I've been in real estate full time now for 7+ years and part time for 10 years before that. I'm a technologist applying my technology and data science. That's why they called me the mad scientist to this area of real estate. And there's about 50,000 people following the data science that I publish. It's all real estate data science, and really came out of my ability to read numbers and read a very large amount of data and figure out patterns that may not be obvious to others.
Beautiful. Yeah, an amazing gift. And I've seen your deals and I've seen your webinars and I see your level of sophistication and also simplicity with it too, right? It's not just taking and understanding numbers, but it's able to communicate it in a way that's digestible and then it's inspiring and actionable, right? Especially as it pertains to multifamily investing. So with that being said, what's been the most crucial either team members that you've built? Because I think it's one of the most encouraging things that I've seen you do is expand and scale on a massive, massive way. So tell us about getting out of your own way, right? Getting out
Sure.
of your way and delegating, right? Because of how smart you are and how well you have done things. Walk us through overcoming perhaps in the beginning when it was tough to scale on. And by the way, I want to, how many employees do you have now? How many team members?
29. We have 29 full-time employees.
Mm-hmm. So tell us the biggest challenge for overcoming, and maybe it wasn't a challenge, but I am assuming it might have been for someone like you because I know it's been for me.
It absolutely was. I mean, you hit it on the head, right? So I consider myself a fairly bright person, and for folks like us, it's very difficult to take something that we're doing and give it to other people. But I was very lucky in that I had a mentor. His name was Paul. He and I were running a company for about 15, 16 years. And Paul used to say, Neal, the biggest challenge you'll ever have is to learn to delegate, because you do so many things well that it becomes very difficult for you to let other people do them. So over the years, I made a very conscious effort to become a better delegator. So there was a time when 50% of the books that I was reading were about building structure and delegating and basically doing company building, not company creation, right? That I felt very comfortable with. But actually, how do you take a company up a level, up 2 level, up 5 levels, right? So that became an obsession, a fixation of mine. And one of the things that I discovered out of it, which certainly it wasn't where I was going with it, right? It just sort of happened. As I studied the area of scale, it became obvious to me that, especially for real estate, but also for other areas, the one part that the United States does very poorly, and some parts of some companies in the US do this really well, was that they don't use virtual assistants. And the ones that do use them in an extremely basic fashion. For example, there's a virtual assistant that was arranging this podcast, right? And that's a pretty typical thing that virtual assistants do. What I found was that in places like India and the Philippines, if you created a system where you found the top 1% of the virtual assistants there, those were really very high quality people. So I became obsessed with how do I find the top 1% of virtual assistants in any area and use that to scale my business. Now, to be honest, it never means that you don't hire people in the US. That's kind of silly, because what we do is we use the 2-to-1 ratio. We found this over 7 or 8 years of experimenting, we found that we hire 2 full-time employees in the Philippines for every 1 employee we hire in the US. So right now we're at 10 people in the US, and we're at 19 in the Philippines. Now, this doesn't include our 150 employees that are at the properties. We don't consider them to be part of our company because they're part of the LLC that we created. They still report to us, right? We can hire them, we can fire them, but they're not part of our company because they're part of one of our projects. So there's about 150 people there. So these 29 people, what I found was this, that if there was a methodology that I could invent, and I'm known for constantly inventing things and talking about them on the web. You can Google my first name and last name followed by virtual assistants, and you'll see that I'm presenting at half a dozen conferences about them. Is that I become very fixated with the 1% rule. I want to get to the 1% of everything, the 1% of cities in the US that are fastest growing, the 1% of properties in the US that are most unoptimized, the 1% of virtual assistants. And the Philippines, I actually got very lucky. I was able to use technology to get to the 0.1%. So I was able to get to so if there were 1,000 virtual assistants on a platform, I was able to get to the one person that was better than the other 999. And once I did that, I hired as many of them as I could. At this point, 19 of them. Obviously, there's a lot of turnover, so you're firing and hiring as you go. Even if they're very bright, there's lots of reasons why they don't work out. Many of them don't want to work at night. So one of the things that I learned very early on is that you want them to work your hours. So all of our staff work specific 8 to 5. We don't allow any flex time. As far as I'm concerned, all of their jobs are flex. Why? Because Manila traffic is 2 hours each way. They're saving 4 hours a day by traveling from their living room to their office to do their job. And that's their flex, right? But otherwise, they work 8 to 5. And some of them work at property time. So if it's an East Coast property and they're attached to it, they work the time of that property. But that allowed us to grow our business faster than pretty much any company in our space. We've grown 50 to 100% year over year. And I'm simplifying it by saying that these people really accelerated because it is the process that you develop of working with these people to elevate them to that level. Yes, our people do things like podcast booking, but some of the things that our staff in the Philippines is doing is truly mind-boggling. You'd have trouble finding companies doing it here in the US, and we're doing it with that kind of staff. Now, obviously, they're acting as force multiplier or force accelerators for our US staff. And so when there's companies where people are like, I wish there were 3 of us, but I know the company can't afford it. Well, we've solved that problem because there's always 3 of us in every one job.
Amazing. Yeah. And I love this part of the mad scientist of what you're doing, right? Because multifamily investing is the product, is the bones that create, and the cash flow that goes in, it creates the cash flow and the tax efficiencies. But it's the data, it's the technology, it's the systems, it's the people, right? That is running this entire organization, right? So is that a fair summary, Neal?
It is, and I'll give you an example of that. So a lot of people are like, so I mean, what do these people do, right? I mean, what you're really doing is you're buying multifamily properties or building them, right? So how does having this force multiplier really help you? So let me give you a real example, and you'll see how powerful it is, right? So a while back, we installed 4K basically high resolution video cameras at one of our 235 unit properties. So this property has these external gantry walkways, so you can actually see all of the doors in a row, and we'd install cameras on both ends. And instead of pointing the cameras at the parking lots, generally they point them there so that the cars are not being broken into and things like that. We pointed them to the gantry, this walkway. And we took one of our army in the Philippines, and we said, what, these cameras have motion capture, right? So they're not capturing anything when there's no motion. We want you every day, right, to spend an hour watching the cameras. And as you're watching the cameras, we want you to ignore everybody that you see except for people that have dogs or cats, people that have pets. And when those people come up the stairs to this long gantry, follow them to their door. And here's a 2D chart of the property. Make sure that you know which door they're going into. And as they stop in front of the door and they're fishing out their keys, take a picture of them through this high resolution 4K camera. Take a picture. And you know now by looking at this 2D chart that the person is walking into, apartment number 123. Now go into the property management software, AppFolio, log in, click on apartment 123, and go to the tab that says pets and see if there are any pets there. And if there aren't any, then send that picture that you just took to the property manager saying 123 has an unregistered pet. Now, and it would take a very small amount of time to do this because motion capture cameras are only capturing the time when people are there and they're just skipping past if they don't see a pet. Skip, 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 skip. So in about 30 minutes of work, the person has basically found a number of people that are living in these apartments without pets. Now, you can't possibly do this with US staff. I mean, it takes, effort and time to build it up. You need the systems and the processes. So for a lot of people are like, okay, how much money does this make? Well, it makes hundreds of thousands. And you're like, really? Pets make hundreds of thousands? And the answer is yes. Just do the math. Follow along what I'm saying. In a 235 unit, we found 30 pets that were unregistered. These people are supposed to be paying pet rent. So we weren't doing anything shady. Each pet was supposed to be paying $30 a month. So we've got 30 people that are supposed to be paying $30 a month. That's $900 a month or $10,800 a year. Okay, so firstly, we've now made $10,800 of profit for our investors by using a virtual assistant that costs $5 an hour for 30 minutes, right? You see the 200, 300x or 1,000x return there, right? But that's not it. We weren't after the 10,800 because, and we make it for 5 years, right? Because we are owning a property for 5 years, so that's about $52,000. And you might say, okay, where does the hundreds of thousands come from? Well, because multifamily properties are sold at 5 cap, which means that when we raise the income of a property by $11,000, we will receive $11,000 multiplied by 20 when we sell. But to do it, we can't just do it at the end. We have to keep doing it for a while because whoever's coming in is going to make sure that that income was there every single month for the last year to pay you your 5 cap. So it's an ongoing activity, which should be done because you're also making that cash flow. So you're making $10,800 a year for 5 years. And then at the end, you're making $10,800 multiplied by 20, which is about $210,000. So your total aggregate was $260,000. And over 5 years, you spend about $125 in manpower. That's the use of technology. 4K cameras, you had to be 4K. You can't use 1080p cameras because the gantry is very long and you can't tell which house they're going into. So you make that initial investment of about $4,000 into cameras. And the cameras are also being used for other things. They're not just being used for this one purpose. They're also being used to prevent people from breaking into cars or breaking into people's homes because they can see a camera's right around the corner. So bottom line is, this is magic. This is power. The ability to use outsourcing combined with this kind of technological gizmos creates an enormous amount of profit for investors. I'll give you another example. I mean, these are very, very powerful. So we have a property in Utah, and it gets pretty cold there, and also gets very, very, very hot in Salt Lake City. And so we were trying to fill up the covered parking at this property. And the property, I think, had about 50 covered parking, but only 20 were filled. So we went and talked to the property manager and said, what can you do? Let's fill up this covered parking and sell them for about $30 a month. And they're like, yeah, we know whenever people come in, we mention that. We were like, this clearly is not going to work. So here's what we did. We told another one of our army in the Philippines, and we said, make a bunch of phone calls to see if people want to buy these. So they made a bunch of phone calls and it wasn't very beneficial. Maybe 1 or 2 parking spots got leased. So we were like, okay, let's brainstorm on why people get covered parking. And after 20 minutes of brainstorming, we realized that people only buy covered parking on days that are extremely cold or extremely hot. So if it's extremely cold and there's a foot of snow in Utah, then they want covered parking. If it's 110 degrees in Utah, then they want covered parking. So guess what? We created a system where each day a person in the Philippines checks the temperature in Salt Lake City. And on days when the temperature is over 100 degrees or under 30 degrees, so it's under 25 degrees, it's snowing. That's the only time when we make those phone calls. And so now we filled up 30 parking spots at $30 a month. Once again, the math is very similar. $30 a month, $900 a month, 10,800 a year, $50,000 in 5 years, and then you get that $200,000 pop there. And once again, we're combining technology, in this case, weather technology, with a call center in the Philippines to make that kind of money. Now take these kinds of bizarre things, which I cook up all the time, right? That's why they call me the mad scientist. I'm cooking up one every day. You take that and you apply it to a $400 million portfolio. Imagine how much wealth you create.
Amazing. My mind is blown away, and I'm sure our listeners are. I think of like an inch of effort is worth a mile of return, right? How are you being creative in a very competitive world, right? To even find a multifamily property, to underwrite the property, to get the lender to lend on the property, to close on the property. And if you're not taking advantage of parking, of pet rent, of ratio utility billing, of ways that you can maybe meter certain units to get, and so that all the utilities goes back to the units, anything that's going to increase the NOI, guess what, eventually if you're not using technology and data to drive those decisions, you're not going to buy it because you're not going to be able to pay for it, and you're not going to be able to achieve the returns for your investors. Is that a fair summary, Neal?
Absolutely is. The truth is this today. Multifamily is a privileged asset class everybody wants in, especially after the pandemic. If you look today, Marcus and Millichap did a survey about 2 weeks ago. It was a very powerful survey because they surveyed tens of thousands of very rich property owners. And they said, what do you want to buy today? And what do you want to sell? The answer was, we want to buy multifamily, industrial. Those are the two asset classes. Multifamily makes all the sense in the world because it performed really well during the pandemic, right? We had delinquency. When we say really well, we mean relatively. We didn't like the pandemic, but boy, we didn't suffer compared to the retail guys, the hotel guys. So they asked them, so why industrial again? Industrial makes all the sense in the world because 5 years of e-commerce growth happened in 1 year. When e-commerce growth happens, you need industrial space to store it, right? Industrial is the equivalent of retail for e-commerce. And if you just multiply, e-commerce at this crazy rate that we've seen in the last 12 months, then you're going to need a lot of warehouses to store it, right? So that those two made sense. So then Marcus and Millichap said, so what do you want to sell? And the answer is, we want to sell retail, we want to sell hotels, we want to sell malls, we want to sell senior housing. Senior housing occupancy has dropped to the mid 80s, which is shocking, right? We in multifamily start to panic when we go from 96% to 95%. Well, imagine being at 85%. I mean, you don't make any money at all at 85% occupancy. And that's what it's dropped to in the last few months. And still dropping, by the way. It hasn't plateaued, it's still dropping. So bottom line is, multifamily came out of the pandemic as a privileged asset class. And that's the good news. Here's the bad news. For 10 years, since 2011, people have been squeezing the profit out. People have been rehabbing. And today, we're in a situation you're paying a crazy amount of money. A Class C 40-year-old property is selling for $120,000 a door nationwide. In California, of course, I don't want to mention the numbers because they make no sense to me. I love California. I live here forever. I'm never going to invest here because there's no math that makes sense in California. California must have its own mathematics books that I've never managed to find. Therefore, I don't invest in California. Love California. So even the rest of the US, though, it doesn't make sense. You're paying $120,000 for a Class C property that's 40 years old. It comes with all of its problems, broken pipes and broken foundations and old roofs. When you can probably build something brand new for $160,000, that delta is not sufficient. There is a problem. And so today, when you have to make money, you have to pay what you have to pay. If you want to buy a building, you're going to have to pay that $120,000, right? A lot of people say, we are going to find buildings that are off market, blah, blah, blah. My answer is, I haven't seen anybody do that. Everybody's paying market. Even the people that are buying off market are paying they're getting maybe a 2% discount. They're lucky, right? And good for them. They got a 2% discount. But 2% is really not going to help you achieve double-digit returns for your investors. What's going to help you is having a set of strategies that are different from everybody else. And so today, to thrive in the marketplace, you need uniqueness, right? And Brett's company deals with some of those things, but you've got to still create the profit, right? You got to create the profit to benefit from all these amazing strategies in real estate. And that's the hard part today, actually creating the profit.
Amazing. By the way, you can learn more about Neal Bawa at grocapitus.com, right? Grocapitus.com.
There's actually an easier way. I want to point out an easier way. So I happen to be the only Neal Bawa on the internet. So when I was picking an American name, I first picked Neil. Yeah, right. I was a huge fan of Neil Armstrong. Still am. And so when I was doing that, I Googled and like there were a few people with Neal Bawa, and I was like, maybe I go with the Irish spelling, Neal Bawa, Bawa. And how many other Neal Bawas on the internet? None were there. So I picked the Irish name, right? And so now you can just find me and a bunch of stuff about our experiments on the web just by Googling Neal Bawa.
Amazing. And so much to unpack there. I do want to now focus like a laser on capital gains tax deferral and thinking about
Sure.
strategies that are beyond what the traditional folks have done in the past. We focus on the Deferred Sales Trust, and we believe it's transformational. It's a strategy that enables you to get time back, and time's the one thing that is everyone's on the same playing field. You can't get it back, and you got to figure out a way to sell high, buy low, or just buy deals when they make sense. And we just had
Yep.
Dr. Gurpreet Prada on. I don't know if you know Dr. Gurpreet, but he has over
Gurpreet is a student of mine. So Dr. Gurpreet Pada is actually a student and an investor of mine. Yes.
excellent, yeah. And so I can tell, right, because you guys, the way your guys' minds work and how smart you are and articulate, all of those things are great. But he said a great thing. He said, time is the one great equalizer, and he goes, the Deferred Sales Trust, what it gives us is the ability to sell high and buy low, right? And not have to overpay, and also to be able to diversify, right? And
Yeah.
so in 2006, Neal, I was at Marcus and Millichap. That's where I started here in Northern California. I actually grew up in the Bay Area, multifamily and development, and I was doing brokerage. And it was like the height of the market. Everything was great. And then something happened, the 2008 crash. And so I went from making a little bit as a new broker to making like nothing overnight. And I saw my friends, family, and clients lose half of their wealth. Some lost everything because, and the biggest thing we found was they felt like they were forced to overpay via the 1031 exchange, right? They had built up wealth and had
Yep.
overpaid. So we learned about the
Yep.
Deferred Sales Trust. Fast forward, I start to implement this strategy and start to talk about it, and my business starts to grow, and clients start to have some relief and some options. Now, a lot of people weren't using it because their values were down, but fast forward, we're back here again, and we've never done more business, and it's going like gangbusters because people are looking for diversification, they're looking for liquidity. And I think I'm back. Sorry about that,
You
everybody.
are.
Had a little glitch there. I don't know where I lost you, but basically, '08 crash. We learned about the Deferred Sales Trust kind of too little, too late because values
Mhm.
are dropped. But now we've never been busier. But could you just talk to us about the importance of time, diversification, liquidity, and being out of debt and being able to buy real estate whenever you want, all tax deferred? What would that mean for you and for your investors or anyone that's listened to the show?
I think it's huge. I find that one thing in investors that are active in real estate, they one of the things that they consistently don't seem to do is to weigh different investments based on their post-tax benefits and also based on the value of time. In the industry, we use a methodology called IRR or XIRR to calculate the value of your time and say, you don't just want to look at, whether my buck is becoming $2. I want to see whether it's becoming $2 over a certain amount of time, right? And And how much am I deferring cash flow? Is it giving me $2 at the very end, or is it giving me $2 all along so I can run my life with it? So I think firstly, understanding that in real estate you have to apply a value of time to everything makes an enormous difference, right? And there's projects out there that we run where we don't give you any liquidity, any cash flow until the end. And in my mind, the projects that we have where we do give you liquidity all along are better. I can't argue with that. They are absolutely better. So calculating liquidity, looking at the time value is very key. And also constantly, continuously, especially in California, calculating your post-tax gains are very good. I'd like to challenge you investors. Let's say you know about 5 different kinds of investors, some investments. So maybe like buying a single family, buying a fourplex, investing in a syndication, doing private lending, right? Let's take any 5 representative things that you might want to invest in. And I want you to create a thought exercise that I think will really blow your mind. I want you to go into Excel, hopefully, and you know how to play with Excel based on a basis level. And I want you to take a 30-year time frame for each of those investments. Now, some of those investments, like private lending, let's say on average you're doing it 1 time a year. Well, then you're going to be repeating it a number of times to get to 30 years. Some other investments like DSTs you might hold for 5 years or 10 years. In that case, you're going to be repeating them less often, right? So some are more repeated, some are less repeated. But every time you exit a project, whether it's a 1-year investment or a 5-year investment, make sure that your calculation includes the taxes that you paid, right? And if you're rolling it using 1031, then you're not paying taxes. Good for you, right? So it's going to go up a little bit faster. So maybe if you're doing single family, you can do one where you're selling it, one that you're rolling it to 1031. And I think if you do an exercise for what happens to your wealth, your long-term wealth building in these different situations, I guarantee that even if you have done real estate for 10 years, you're going to be in for some interesting shocks. There's going to be things there where you're like, so this investment I thought was the worst of them all. But by the time I understood the value of money, by the time I understood that there, and by the way, you also have to account for gaps. You can't say silly things like, well, I sold my syndication share or my DST share on this day, and the very next day I reinvested. No, that's not reasonable. There's going to be a gap in the middle, right? So longer term investments may have a lower return, but you don't have gaps in the middle. When you do this thought exercise, it's going to make you a much better investor because by definition, you're going to look at the 3 or 4 things that swing the needle a lot that people don't think about. One, time value of money. Second, the taxation, right, which is such a big deal, especially in California. It's a huge, huge deal. It changes your mindset completely. And then overall wealth building over time, right? So the people ask me, Neal, you're a multifamily guy. Is multifamily the best wealth building strategy over a 30-year time frame? Now, notice somebody's asking me a very specific question, right? So I think multifamily is great, but I think the answer to his question, this was a person that asked me this question, very experienced investor. He said, over a 30-year time frame, what investment is the best? And I said, I happen to have done this thought exercise. So of course I brag about everything I've just said for about 5 minutes. And then I say, in that exercise, the winner was not multifamily. The winner was fourplexes that people bought and kept for 30 years and refinanced every 6 years. And every 6 years, they took the proceeds and they reinvested into another fourplex, just like the first one. And I assume that the price is increasing over time. So obviously, when you're taking that money out, now the price has gone up. So if I extrapolate that one over 30 years, it beats the shit out of everything else for one simple reason. You never paid any taxes on that 30 years. You got on $1 million property, you got a massive amount of depreciation, right? And you use that depreciation over 30 years. I did straight line instead of doing cost segregation. And then the equity that you built up over those 30 years, which for one fourplex might be 3.5 million roughly, because you're paying down the mortgage over 30 years, right? So at the end of 30 years, the property is free and clear. You never paid taxes on that either, because when you died, your kids, the basis got adjusted for them. So when I look at that from a 30-year perspective, it beat the shit out of what I do. But not a lot of people have that level of patience, and not a lot of people know that every 6 years in that strategy, you got to reinvest, take all of your equity out, and rinse repeat. So I think these kinds of thought experiments are incredibly beneficial. And for years, people, when I would tell them this, people would say, so are you selling fourplexes? The answer is no. And they're like, well, why don't you sell fourplexes? So it took me 5 or 6 years, but I finally got to the point where I now build and sell fourplexes to investors as well. It's not a big part of our business. It's a small part. Not everybody can afford a fourplex, right? And why fourplexes? Because single family just doesn't scale well. So I love the fact that you got 4 tenants, and when you lose one, you're the other three are still paying the mortgage. So I adore that.
Amazing. So much there. I absolutely love it. And it's fascinating to again become a mad scientist of multifamily investing, but it's really becoming a mad scientist of numbers, of data, of strategy, right? And then applying that to investing in real estate or whatever investments you may be going into. The other thought too is there's a couple things with the 1031 exchange that people may forgotten about, but it's been basically limited to just investment real estate. It doesn't apply to high-end primary homes. We just did an $8.3 million deal in Palo Alto for a primary homeowner, helping defer a bunch of tax. We just did a $2.6 million business sale out of Alabama. Right. And yep. What's cool is now they've taken the funds, and one of them is building 72 units of multifamily in Tennessee, all tax deferred. So the idea of instead of refi and either go build or buy something else and get more, the deferred sales trust, you can sell, move it in there, and use the funds that you would have paid in tax to go build 72 units, right? All of a sudden you get a brand new depreciation.
That's a very powerful strategy. To me, I think that is, in my mind, not a very common use of the DST, but unquestionably the best use of the DST. To be able to put that money in and then go build something, give yourself time to create an enormous amount of value, which you wouldn't have created otherwise, right? Correct. Because you didn't have access to that money, correct. Right? That 100%. Is incredibly powerful, because what you're doing there is force multiplier. You're taking that taxation benefit and truly multiplying it by creating more value with new construction.
Exactly. And by the way, that's the reason we started Capital Gains Tax Solutions, because of I call it the Monday morning quarterback story, right? Neal, I'm going to tell you the story. Gentleman, 2006 in Minnesota, sells a $20 million asset across the street from the Minnesota Vikings stadium. He's worth a couple of million bucks. He's really smart, really sophisticated. But the first time he's going, you know what? Like The Big Short, the movie and the book, he goes, I don't think this thing's going to turn out too good in the next year or two. I'm going to, for the first time, do a deferred sales trust. So he sells the asset, parks the funds. Okay. And he's living happily ever after. Market crashes. Now he's in conservative stocks and bonds. He's not in really risky stuff either. So he's pretty safe there as well. Now the bank calls him back 5 years later, Neal, and says, hey, that property is sold? And he said, yeah. Well, we just foreclosed on it from the guy who overpaid for it, a couple of years back. I'm just curious, would you like to buy it back perhaps? And he goes, well, maybe. What's the price? And he says, well, 60 cents on the dollar. He said, yeah, it sounds like a good deal. I'll buy it back. So then he used the funds from the Deferred Sales Trust. He sold out of his stocks and his positions there, put it into an LLC, and then he bought it back at 60 cents on the dollar. And my mentor, my business partner, told me this. And I said, tell me again. I said, I'm sitting in my car and it's 100 degrees out and I'm trying to sell some real estate as a real estate professional. And I said, tell me that again. I had to tell you 4 times in a row. I said, Bob, if what you're telling me is true, I'm going to burn the ships and I'm going to go all in and I'm going to start, Capital Gains Tax Solutions. I'm going to become a trustee and I'm going to roll this out to as many people as I can. Okay. And it's true. It still works. There's billions under management, 25-year track record, thousands of closes. But people have this false belief, and so did I, until he showed me how to do it and how it actually works, that it's they don't think you can do it. They think it's only a 1031 exchange, but we're doing it. And then I did it with my clients, and we're doing more. So all that being said, Neal, yes, and yes. You can go to capitalgainstaxsolutions.com to learn more about that. We are running out of time, and I'm actually going to have to jam here in a minute. So are you ready for the lightning round? We're going to ask you 3 questions, and we're going to be done.
Go for it.
All right. Knowing what you know now, if you can go back to your 25-year-old self, what's the one book you would tell yourself to read?
It would definitely be The Miracle Morning. It's not the best book of all time, but it gives you, if you read this book and follow what it does, it allows you and gives you the time to find your favorite book. It gives me an hour every day to find that X Factor book.
Perfect. What's the one thing that you're most curious about right now?
I'm most curious about the potential of electric vehicles to change real estate. EVs and the model of EVs basically being where people don't own them is going to be the dominant model within 10 years. And the impact on real estate is going to be absolutely staggering. Imagine 800 million parking lots that are empty.
Wow, I like that. That's really fascinating too. Last question, and then we'll remind listeners where they can find you. How do you stay centered? And maybe it's the miracle morning question, right? In your values, after all your success and all the companies you're running and everything that's moving forward so fast, how do you stay centered in your values, and how do you stay encouraged to reach for new heights?
Um, the first part is simple. Every day I ask myself this one question: what is going to make me happy today? And when I ask myself that, it tweaks my brain away from just running after more money to being focused on happiness. So I spend an extraordinary amount of time, because I asked myself this question today, to kind of, shoot for happiness, which is not the same thing as shooting for money. What drives me is is that I feel like I've changed. I've gotten to the point in my life where I've achieved what I needed to from a monetary basis. And what I want now is the pursuit of excellence. And I think that that is not the same thing as money, because every once in a while, I'll do something that's truly excellent and give it away. And 50,000 people are now using it. And, some of them come back and say thanks, and many don't. I know that there's 50,000 because they're actively using a system that I created. And that's excellence. And I think that over time, if you do not move to the pursuit of excellence from the pursuit of money, you're going to lose a part of your soul.
Beautiful. Well, Neal, I want to thank you for being on the show today, sharing with us so much knowledge and wisdom and inspiration. I think I've become more of a mad scientist of underwriting, of data, of multifamily in just about 30 minutes. For our listeners who want to find you, what's the best place, one more time, for them to find you?
So the two things that we're best known for are our cities list, cities that nobody knows about that are very profitable. So if you type in Neal, Bawa, Location Magic into Google, you'll see that. We're also known for our strategies of how to use virtual assistants to 10x your business. So you can type in Neal Bawa virtual assistants into Google. Those are the best places to start. Our website is multifamilyu.com. That's multifamily followed by the letter u.com. We do 26 webinars a year there. About 40,000 people attend those.
Amazing. Yeah, and I've attended those and they are first class, and you should, if you haven't connected with Neal, get on those right now because you're missing a lot. And for our listeners, I want to thank you for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust, or getting with someone like Neal Bawa to invest and to grow your mind with multifamily investing is the best way for you to grow your wealth. Please go to capitalgainstaxsolutions.com if you can help you at all, or experttaxsecrets.com if you want to be coached on how to use the Deferred Sales Trust to grow your business. Thanks everyone for listening, and please subscribe